Let's narrow our focus. I'm looking at the money calendar right now for this week. And this week, and the news that's going on, you got to be looking at this going, well, what do we do now? You got a market that's down again this morning. You got oil that's just gone off the charts again this morning. And with the conflict that's going on in Iran, and it seems to be escalating, not even by the day, but by the hour, there is a growing likelihood that this may last longer than a lot of people, even me, expected. Mark has been selling off. Look at last Friday's jobs report. Came in surprising. Non-farm payrolls fell by 92,000. They missed expectations. They thought there were going to be about a $55,000 to $60,000 job gain. Unemployment ticked up too. That's what caused the market sell-off on Friday. And it's worth noting that this is the third time in the last 5 months that the labor market's posted job losses. So this is a bit of a scare, although I think it could turn out to be something that could be longer-term win for the stock market. So, some people are looking at different stocks out there right now, and it's kind of like trying to pick a needle out of a haystack. And as my researcher, Jay Harris, says, instead of picking a needle out of the haystack, why not do something different? Why not just, instead of trying to find a needle, how about trading the entire haystack instead? So as we look at the money calendar and we look at the movements here for March 9th through March 13th, immediately I see bullishness. But keep in mind, what am I looking at right here, folks? I am looking at ETFs. And so if you look at the ETFs across the board, I've got from the mid 70s to the low 80s in terms of the number of ETFs that are bullish versus the number of ETFs that are bearish. And for those of you that need a little bit of schooling on this, what's an ETF? It's just an exchange traded fund. All right. It allows us to access broader markets. So we're not going out there putting money into one single stock. We're putting into a bundle of stocks, a bundle of bonds, or maybe even a bundle of other assets into one particular product. And that's what gives us diversification risk. It means we're going and risking against several stocks, regions, or themes without having to pick an individual stock or an individual security. So we're leaning bullish on the money calendar, but keep in mind this is bullish with a twist. We're looking at ETFs that are tracking the most bullish right now versus bearish. Now, I want to tell you something else. We noticed a similar pattern today that we've been talking about for weeks, and that pattern is safety. So take a look at what you see down here near the bottom. You'll see two different symbols on here. We actually talked about this sector not long ago. And it's not oil, and it's not energy, and it's not utilities. It is gold, in this case, gold miners. So you got two of them that popped up here that look really well. I mean, one's got a 90% accuracy in the last 10 years. The other's got 100% accuracy. And so I'm talking about GDX and GDXJ. These are gold mining ETFs that track regular size or mid-sized to small-size gold mining companies. So instead of owning physical gold, what GDX does is it holds shares of major gold miners, maybe Newmont, Barrick Gold, and Agnico. These are just a few. So what's the difference between GDX and GDXJ? GDXJ is the gold miner juniors, and they invest in smaller mid-sized gold companies. All right. So they're more on the exploratory or early stage production phases. That's the difference between the two. Both of these patterns are bullish over the next 30 days. And so when I look into these, I got to take it a step farther, and I want to see, well, first of all, let's take a look at GDX. 10 for 10. That means in the last 10 years, GDX has held a really nice pattern here, going from 2018 to 2019. In fact, the worst of the years was, guess when? 2020. And it eked out something just a little bit less than 1% during this 30-day time frame. Last year, 25.45%. And as you remember, we've been in a multi-year bull pattern for gold and for gold stocks, especially GDX is going to be in that pattern as well. So, I take a look at that, And I also go in and I take a look at, well, what about the junior miners? Very, very similar. So no reason for me to kind of repeat that. But you've got here 9 out of 10 or 10 out of 10 high historical patterns. When you take a look at GDX, the pattern itself, this is what's going on with GDX here coming into today. So, this one's just been kind of on a tear for years now. But if I were to take the most meaningful pullback, that would have happened at the end of October, right? End of October, beginning of November, when the GDX ETF dropped just below 70. And of course, we ran up into the fourth quarter, at the end of the fourth quarter into the first quarter of 2026. As you can see, this pattern ran up above 110, had a little bit of a pullback, then jumped up again to above 110. And right now we're sitting just above 101 coming into today. So there is the seasonal pattern as we look at GDX and we look at the gold sector as well. So once again, what are we talking about here, folks? We're talking about that in times of crisis, safety stocks will rule the day. And safety stocks they've been oil, they've been energy, they've been utilities. There's even some regional banks in there that have fallen into this area. But I want to also let you know that gold has been on this list as well. All right. War patterns are often followed by safety first and then the stock market later. So what I mean by that is that as you start to see the entire herd jump into safety, and that seems to be the case in the oil market. And we would expect the same thing to happen with other safety stocks. As you see the herd, as you see the crowd move into these areas, that's when we got to start looking at the overall stock market in that later session. And that's those stocks that we're seeing right now, and even ETFs. SPY, QQQ, DIA. Those will be the next patterns that happen in the cycle if those cycles indeed end up happening. And then finally, of course, we want to be ready for the turn, right? If you want to be ready for the turn and you want to be ready for the turn with all of my research, then you see that little QR code that's sitting above me right now, all right? That is for a special price that you could get my stock and ETF research for less than $1 a week, all right? Right now, it's for a limited time. And for those of you that are brand new, want to take advantage of something that gives you all of my seasonal research as America's pattern trader, then that's how you do it with the product we call Stock Cycles Trader. So there you go. Get that while it's hot.